Ever looked at an old photo of yourself and thought, what was I wearing? At the time, those baggy jeans and neon sunglasses seemed perfect, but in hindsight, a total disaster. Now, what if I told you that the same thing happens with investments? You did your research, you tracked ratings, you listened to the so called experts, it felt like a smart choice. But was it really? Hi, welcome to holisticinvestment.in, where we simplify the world of personal finance for individual investors like you. Let's play a quick game. Would you buy a car just because it won Best Sedan of the Year in 2014? Of course not. That was 10 years ago. And yet, when it comes to mutual funds, most people do exactly that. Chasing funds with stellar 5-year or 10-year returns combines that past success guarantees future profits. But here's the truth. Past performance is like an excess promise to change. Comforting but unreliable. I have seen this mistake over and over. In 2000, everyone was obsessed with a fund delivering jaw-dropping returns. I warned my friends, they ignored me. In 2008, another hot fund was getting massive investments. Again, I said, be careful. But who wants to listen to a buzzkill, right? You know what happened next? These funds crashed not because I had some magical foresight, but because I looked at something others ignored, the current portfolio. The warning signs were all there. People love talking about low cost investing. Expense ratios should be low, don't pay for financial advice. But have you ever calculated the cost of a bad investment? A fund that underperforms doesn't just hurt your returns, it wastes your most valuable asset, time. Every year spent in a weak fund is a year of lost compounding. A year that could have been spent in a better investment. And let's be honest, how many investors have the humility to admit they picked the wrong fund and cut their losses? Almost none. Instead, we defend our past choices. We rationalize losses. We tell ourselves it will bounce back. But will it? Because bad funds don't magically recover and time wasted is time lost. The irony, the same investors who refuse to pay for financial advice will spend hours hunting for the best discount on a smartwatch. They will obsess over saving 0.1% on expense ratios but won't think twice about staying in a fund that's quietly eroding their wealth. They want everything free except the wisdom to avoid costly mistakes. Yet, the most expensive mistake isn't paying a professional, it's thinking you know better than the market. So, how do you avoid these traps? Forget past performance. Look at what's inside the fund right now and admit mistakes quickly. Holding on to a bad fund won't make it better. And number 3, value your time. A lost year in investing is more expensive than any advisory fee. And number 4, think long term. Cheap isn't always better. Paying for quality advice can save you years of regret. At the end of the day, you have 2 choices. Number 1, learn from experience, the painful and expensive way. Number 2, learn from others, the smart way. So, which one will you choose? And if you want professional expert guidance on making the right investment, click the link in our description for a free consultation with one of our certified financial planners. And if you find this video interesting, give it a like, share, and subscribe to our YouTube channel. So, thank you for watching.
You can definitely check out the blog post we have posted on our website through the link in the description. And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.